you see our email address, you know, we get lots of emails during the show. We try to get to them for you, so feel free to email us. We've got an email from Missouri, and Les is writing in. What's the scoop with Lucent? Okay, now we touched on Lucent a bit.
Sure.
Should he give it up, switch to Nortel? We're sort of covering this again, but maybe there's a lot of interest out there.
Yeah,
so.
there is. I think that if you're a short-term oriented investor, obviously Nortel is doing a little bit better. If you look at the price today, you'll probably see that Nortel is up a lot more than Lucent. I think over a longer-term period, Lucent is probably going to outperform Nortel as it begins to get its act together in the optical and wireless space.
Okay. We've got an email also from Phoenix, Arizona. Bob. Now wait, we'll get to Bob in just a second, but first we've got Anthony writing in. He's opening an online trading account. He's looking at 4 stocks. There you see them: Intelligent, Network Access, PSINet, and Elan.
Well, Anthony, I think you have pretty good diversity here. I see a couple of stocks that have sold off quite aggressively, and I see some that are reaching their 52-week highs. My favorite in the group is Elan Corporation. It's a stock that we bought in the mid-20s when the FDA delayed approval of one of their drugs for chronic pain, which we figured was one of those correctable problems I talked about at the beginning of the show. And you will see we have 100% gain in Elan. Elan has an extremely good pipeline. They have drugs that are still being approved in the FDA, and I think you'll be well rewarded in Elan.
Okay, now we're going to get to an email on Honeywell.
Sure.
We've got Bob from Phoenix asking for your view of HON.
Well, Honeywell is one of those securities that showed up as one of the first beneficiaries, if you will, of the slowing economy. They came in with lower earnings expectations, and they sold off pretty aggressively. And I think with the price you see today, it's one of those old industrial type names that you can buy that have sold off. They will begin to hit the earnings again. If you hold it for that 3 to 5 year window, you'll be very well rewarded. You could see that happening a little bit today.
Okay, let's go to the phones, and we've got Jason calling from New York. Hi, Jason.
Hello. I was wondering about Barnes & Noble, barnesandnoble.com.
Sure. Well, Barnes & Noble or barnesandnoble.com. Well, let's touch on both for a second, because I think it's quite interesting. I think that the book arena was the first big split you saw between the bricks and mortars and the so-called internet type of entities, and barnesandnoble.com never really got going on track, and the Barnes & Noble did not do very well either. And I think I would probably be a buyer of Amazon. You sound a little bit older, so you might be more of a conservative investor, but I saw recently Amazon being taken out of technology space and being put in a retail space, and Amazon has done extremely well as a bookseller, and I think they'll continue to do well. And the internet probably will come back around over the next 2 years. I think it's an important part of the economy, and if you have patience, I would take the Barnes & Noble money and put it in Amazon.
Now, that's not a particularly popular view these days.
That's right.
Amazon, you know, is coming under a lot of scrutiny, possible cash flow problems.
Right.
I mean, you've read it just like we all have.
Right.
What makes you still favorable on them?
Well, Amazon has enough cash to get through this downturn, if you will, in the internet environment. And I think Amazon, whenever there's a new book coming out, they sell as many books as your major brick-and-mortar retailers. So I think that they're a company that's going to be with us for quite some time. But they're kind of a victim of the entire attitude about the internet space right here. They will be one of the survivors, and they have enough cash so that if you're willing to hold them through this volatility, you'll probably be well rewarded. And
you got to be patient because they still haven't turned a profit, right?
Absolutely, absolutely. And I think that, you know, that's why at the beginning of the conversation, I told the gentleman that you have to be a more aggressive investor to take a stake in Amazon. And I'm looking at the cash. If they have enough cash to get the profitability, and it's a good franchise type idea, I'm willing to take a stake in that type of company.
Okay. We're going to head out to Illinois now, and Mike, you're on the line.
Yes, thank you for taking my call.
Thanks.
I'd like to know the long and short term on Procter & Gamble.
Right. Procter & Gamble has had a rough time through the last 12 to 18 months. In fact, a lot of us look, you have this distinction between relative value and absolute value, and you see a company like Procter & Gamble sell off 30% in a day, it scares you. I think that they're going to have to start hitting their earnings estimates for a couple of quarters back to back to get the street back in support of the company. They still have terrific products. People are still going to continue to wash their clothes, Tide being one of their products. So if you own it, I think I would hold it. But if you're looking to initiate a position, I might wait to look for a catalyst to see those earnings begin to hit the targets.
Okay, we're going to take a break right here and come back to take more of your phone calls, emails, anything for Eugene Profit of the Profit Funds. Stay tuned, come right back.